Here's another example now of a recent trade using the ShareStar system. What you see here is a stock which has been running down. This is a weekly chart, so it's been running down for quite some time under this straight falling line of resistance here. That's called a line of resistance, a falling line of resistance. It's a trend downwards, as you can see. It's also leveled out along the bottom here with some low points along here, and we call that support. So that pattern is called a triangle, where it finds a support base along the bottom and runs down underneath this resistance line. And we've got a pattern in here, of course, which is very interesting too, and part of our technology. And so we're just simply waiting now for a buy signal. Now I'm going to go to the day chart. The clock has been wound back here, of course, so this is historical, so I can take you forward and show you what happened from here on. So let's just go forward now. We're just waiting for a breakout of that triangular shape, and there it is. There's the big breakout right there, as you can see. Go back to our weekly chart, you can see it's a strong breakout, and that's the buy signal. So we would need to buy next day. Looking closely at the rest of the data here, turnover is increasing quite strongly, as you can see. In fact, that day there up to 420,000. Previous day there 137, 138,000. So turnover is increasing sharply as well, which is a good sign. So that's in fact our buy signal right there. So we would buy next morning ideally, and it's jumped already, as you can see. It's called a gap up when it does that. It's got real power. The breakout of triangles, this triangular shape here, the breakout has often got a lot of power in it, and so it's no surprise it's opened a bit higher. And we take that trade there. We're going to just take the entry and buy there on that particular day. We always have a stop loss in place. We need to figure out where our stop loss should be in case things reverse and go wrong. And we measure the distance down to our support line here, and that's about that. This is a support line now, those mauve dots, and so that's about 8% down. We might put some noise on that just to give a bit of room to move in case it needs a bit of room to bounce around. That's why these lines have thickness, by the way. That's the noise factor. It's where the stock is telling us it needs a bit of room to bounce around because it's just a bit noisy. We call it market noise, just a bit of where it's a bit vague and not precise. And so if we put a 5% thickness wide band there and put our stop loss at the bottom edge of that, that would be about there, and that would be a reasonable place for our stop loss. It's a little bit further down now, but that's okay. So that would be down here, about 10% down. Now if the price was to reverse and go through that red line, we'd have to sell and get out. That's what it means. It means we need to get out. So, and that'll protect us from any further losses. It's a way of eliminating any loss. That in our world, by the way, that is not a loss. That's a cost of doing business. We're very keen to have you understand that we don't take risks, and sometimes there's a cost of doing business, like there's a cost of owning the computer and the internet connections and so on. And any little losses we see here in trades that go wrong are no different. They're costs of doing business, they're not losses as such. You will have them from time to time, and they're a tax-deductible business expense, and that's just the way it is. So they shouldn't be referred to as a loss. We will not tolerate risk. We don't do that at ShareStar. We work overtime to eliminate the risk. So here we are now. That's that's where the brakes on our car are. If things go wrong, we jam the brakes on and get out. Let's continue on. Now the price runs up a bit more, and let's just way back inside this blue line you can see here, which is normal. So we're not too concerned about that. We must expect this from time to time. And also, it's gone very close up here to these orange dots, which is a resistance line. It's a different form of resistance to this sloping line over here. So we can also just measure the noise, if you like, on that to see whether it's actually gone within that noise width, that noise band as we call it, and it has. It's actually gone just inside that green shaded area there, as you can see, which means it's so close to these orange dots, it's inside the noise boundary. So what that really means to us is that it's actually touched this resistance line and backed off. The same way as it kept touching this falling resistance line here and backing off earlier, now it's touched this one and has backed off. So that's no big deal. We'll just sit tight for the moment and see how we go. Now, just moving on day by day, we just check this each day. That's all we do. Just check it once a day after work. It takes only a matter of seconds to do this, not like you need lots of time. Once you learn how to read this technology, it's quite simple. So to learn how to read these charts using these simple tools, looks a bit complicated at first, all these wavy lines and things and dotted lines and shaded panels and things. You think, what's all that? But once you have it explained and learn it, it's really quite straightforward. And a 14-year-old kid can do this all day long. It's not a big deal. So Okay, now it's moved up again and broken through this resistance line now and come back down a fair bit with the close on the bar, a much lower close there, as you can see. So it's trying to get back inside that blue line again. As you can see, it did it here. It's trying to get back inside quite quickly, which is normal, so we take no notice of that. Okay, now it's moved up again the next day here again now, and that's also above the noise gap. If you look at the noise here, that close now is well above that. That's another buy signal. So we in fact could now buy again just on the next day, which would be in there. So I'll just mark that as another possible entry point just there. When it broke through that resistance like that and is now continuing up, what it's saying to us is, look, I've gotten through this resistance, I can continue up. The same way as it got through this falling resistance over here with this bar in here and moved up, now it's gotten through this resistance line plus the noise. You know, the noise is on that as well, as I said before. Just like this had noise, we're allowing for the noise in here as well, and it's cleared that as well here. So that's a clear buy signal, that bar there, and so we can buy next morning there at the opening price, which is as you see there. We'd also need to have a stop loss in place for that, and so we should measure an appropriate distance down to see where we should put it. And just, if I get that right here, that green line is a form of support. That's about 6.7% down. What I would probably do is put some noise on that and then allow that as well. So what that would mean now is your stop loss will be this bottom edge here, which would be marked by this red line. We'll just put that in place like that, and let's just measure that to see how far down that would be just quickly, and that would be about 8.9% down. So what we could do now also is move this stop loss up to there. Now that's still only a smidgen above our entry price over here, so it doesn't really mean we're in the clear yet. We can still end up costing brokerage and so on, and if this trade here was to go backwards now and go through there, we'd have to sell. So we still aren't guaranteed to make a profit at this point in time. But we're looking better. This original entry here, the stop loss is now here. It's not down here, so that potential loss has been eliminated. It's just a break-even situation here now. All this one can ever cost us now is brokerage and nothing else. We can't lose money there. We still could on this one though. And again, that's just the cost of doing business if it occurs. I don't like the word loss because it isn't really a loss. It's a misnomer and it confuses people. It's just a cost sometimes that we have to incur. We don't want to incur it, and all these techniques are designed to make sure it doesn't happen, but occasionally it does. Some things just, out of the blue, they just occur, and we have to take those into account and understand them. So let's move on now. And it's come down there, as you can see, and that green line is acting as support. There's the noise on it, and it's closed there, which is awfully close to our stop. It hasn't gone through, so there's no need for us to be concerned. And the next bar is a very big bar up, and it's come back to hit the resistance up here again now and test that again. So it's got to get back through this resistance again, having gone back under it. And so it works away there, tests the support right down to our support line now. It hasn't our stop loss line. It hasn't penetrated that though, so there's no need to sell. It hasn't closed below it, and so it's back up again, and it's just giving us a bit of a hard ride here at the moment. You can see it's back up here to the resistance and come back down and closed here. So it's just sort of like working its way sideways in here, trying to break out. And we're just waiting for it to do so, and of course there's the positive sign there. That's in essence, that's another buy signal there. If you look closely, you really could count that as a buy signal, and you might look to buy next morning if you could do that. And your stop might still be here at this point in time, but there's not much different to that entry there. Next day, there's our entry you could have potentially bought in there. We'll mark that. Another entry in there possibly at $3. Okay, and now let's have a look at what happened after that. It bounces again, and then it suddenly jumps like that. That occasionally happens. Actually, this entry point down here, there's a certain pattern in there which indicates there's some real power in this. And as I said before, also breakouts of triangles like this often have a lot of power in them. So what that tells us in hindsight now is that the power was there, then something caused it to put the brakes on for a while and go sideways through here, but then that power kicked in again, and there it is up there. Now that presents a problem for us because it's explosive. As you can see, it closed there the day before and opened up there next morning. And it's got to get back inside that top blue line, like it did over here, get back inside here again, and now it's got to come back inside that blue line. So the risk of the fall now is quite high. So we would normally just take that money and run, I think, at this particular point in time. Now let's just measure and see how well we've done. We bought down there at 266 and we're up there now, we're up 30%. The second entry here, we're up 17%, and our third entry is much the same. We're up about 15% on that one as well. So up about 30% on our first entry, about 17% on our second, and about 15% on our third. We're up here now facing a fairly sharp fall, a long way down. The distance down from this close to that blue line, if we measure that, for example, that distance down is 7.3%. It's a fair way down. Check our weekly chart. It's way above the blue line there as well. That should get back inside the same way. It's going to do that as well. So if we just measure that distance down and see how far it is from the close down to that blue line there, it's down 8.5%. It's a long way down. It's got to get back. It's now on both charts. It's outside there. So the urgency to come back is quite strong. So we'd normally sell next morning given that situation. So we'd sell there, and that would be our profit as we just discussed before. 30%, 17% and 15%, all done in a matter of the middle of February through to the beginning of April there. That's all. Quite a short space of time. Each of those bars is a daily bar, and so we just check it each day once we find entry points and put our stop losses in place. And if it gives us a sell signal, either on a profit or a loss, we just simply sell the next morning, and that's all there is to it. It's quite straightforward. You don't have to sit and stare at your screen for hours. You don't need to be a computer geek. You don't need to understand computing or anything like that. What you've got to learn to do is understand what these tools are telling us and simply learn how to read them. And that's a sell signal there, and so we'd be out. Now, this is a matter of interest. What happened after that? I'll just turn the training mode off so you can see what happened after that. It's just gone sideways. It's gotten back inside that blue line by going sideways instead of falling. And so, you still wouldn't have made any difference whether you sold there or there or there. We've done quite well, as you can see, and we're out. And that's all there is to it. And I'll see you on another video. Hi, I'm Trevor Hurst. I hope you enjoyed the video, and if you'd like to learn more about this and perhaps learn how to do it for yourself, the next step is to click on the link below.